guys, this is Pedro Rofi and you're watching the markets review of today. And we're going to check the situation on the markets, on the stock market, on the Forex market and on the cryptocurrency market as well. So watch this video till the end. At the end of this video, we're going to check the situation on the cryptocurrency market, on Bitcoin and Ethereum as well. We are going to start from the news background which we have for today, and we're actually going to check it, we're going to analyze it, and then we're going to check the charts of the most important United States stock indexes, Forex pairs, and of course the cryptocurrency main currencies like Bitcoin and Ethereum. So as you know, war in Ukraine is continuing. Sweden and Finland have said yesterday that they're going to actually join NATO, and that's kind of a really awful signal for Russia. And as we heard today, that there is some chemical weapon hazard in Ukraine, which now they're kind of investigated, because there's a report that to one of the cities of the southern part of Ukraine happened an attack. It was a chemical attack, and they're kind of investing this the evidences which they have, and mostly if they're going to prove it, mainly if they're going to prove it within some days that it was a chemical attack, that would be really bad for markets, because it's going to make a higher as we say, make the scare or the fear index to go higher, and it won't be really good for stock market. It would be really good for gas prices and oil prices. So here and now, starting second phase of the war between Russia and Ukraine, and this phase of the war is going to be really ruthless. It's going to be really like, as we say, dangerous, and it's going to be actually really wild, and mostly it's going to be faster. And this already happened, it's already started from yesterday. So the news background is going to be under the pressure of all of these negative factors for markets. But gold, oil, and of course gas prices are going to rise now. We're going to just check the situation which we have on the markets. We're going to check the predictions from the previous time of our analysis. We're going to check the charts and the prices, how different assets moved during previous week, and what we're going to have in the next week, or for today, for next days, what's going to happen due to technical factors and due to fundamental factors as well. So here we're going to continue our analysis by the analyzing of this week's economic calendar. So today is Tuesday, and we are going to have some releases, economic releases, important economic releases from Germany, which have been positive actually, and from United States, the core CPI index, which is not going to change, but if it get higher, it would be good for dollar prices during American session. So don't forget, pay attention. Maybe we're going to get some volatile movement for dollar pairs during American session. And EIA short-term energy outlook. So actually the release from the energy agency, International Energy Agency, which says what's going on with oil outputs. Are they going to rise or no? For example, because we know that because of energy prices, because of sanctions on Russia, we need more oil to be produced. But because of the pandemic, most of companies, most of oil producers, actually they cut the supply, and now they cannot just return it to that levels, to pre-pandemic levels that fast that we need. For example, we know that European Union is kind of really need Russian and gas and oil during next year, or maybe during next half of a year, but they're kind of trying to make sanctions to make higher sanctions to just kind of escalate the sanctions, but they cannot actually fully deny, and they cannot fully get out of this chain of using oil and gas, Russian oil and gas. So these are all the factors that we know. But because of some suspicions about chemical hazard in Ukraine, from today, things are going to be a little bit different, and things are going to be a little bit scary. So because of that, we can actually say that maybe sanctions are going to get worse as well. The European and American sanctions against Russia. So because of that, maybe this week is not going to be that good as we think. I mean, it would be really good for oil, for gas, for example, gold, but not for stock market. We're going to check the stock market prices as well, just within some minutes. As we finish the calendar, we're going to check the stock market prices, most important indexes of the United States stock market. For tomorrow, we're going to have some important releases from Britain, but let's see which ones are the most important one. PPI from United States, it's rising. And Canadian monetary policy is not that important. They are not going to higher the interest rate. They are not going to hike the interest rate. The interest rate is not going to hike in Canada. And the price of Canadian currency is really strength because of oil prices strength. And oil prices are not going to fall in the near future, and I don't really think that they're going to fall or reverse that much, but they're in some consolidational formation. I mean, they're going to consolidate further, but gas prices are going to rise. But Canadian dollar is kind of really straightly related to oil prices. When oil prices rise, Canadian dollar as well rise. So United States dollar to Canadian dollar, this Forex pair is going to maybe fall further, but under some pressure, but it's going to fall further. There's some things about oil that, for example, OPEC and the other countries are kind of trying to make higher supplies. So they could fight this energy prices, they could fight the impact of sanctions on Russia, so they could actually supply more oil to Europe. So there won't be any kind of high demand and high prices. But let's see how they are going to deal with it, because that's not the fact that they could, but they would try. Next comes for Thursday from European Union. Actually, it's releases from European Central Bank, which is not going to change. Don't forget, European bank's interest rate could rise, but they're not telling about it. They're not speaking about it because inflation in Europe previously have been rised really fastly, and that's kind of make markets to kind of scare. European stock market could be under real good pressure in the near future, and European currency, euro, could actually start to rise if the European Central Bank's President Christian Lagarde start to tell about interest rate hiking or monetary policy tightening. So just pay attention. Maybe this is a thing that is going to happen within some weeks. So it's actually the main things nowadays on markets, this news about European Central Bank. This could really hike interest rates, but not for now, not for today. They could actually make it. They could actually really suddenly tell about it, because we have information. We have releases from releases about inflation, that there is going to be really high inflation in Europe, and that's a really big problem. So they would need to tighten the monetary policy. Core retail sales from the United States is falling, and the initial jobless claims, which is rising. It's really bad. It's really bad for the United States dollar. During this week, it could be under pressure. So let's see what else we're going to have at the last day of this week's economy calendar. So Friday is kind of out of any important news or releases. We're just going to see maybe dollars going to a little bit hike during Friday, but during next 2 days it's mainly going to fall. Let's start from the technical analysis of the stock market of the United States. The most important stock indexes: S&P 500, Dow Jones, which is an industrial index, and NASDAQ, which is a high-tech index. So here's a situation about which we already told you previously in previous sessions. We actually told you that prices of all of these indexes are going to retest some mirror levels, some mirror resistance, which are the local maximums, and then they're going to fall. So that's the thing that actually happened. 4,500 for S&P 500, 35,000 for Dow Jones, and 15,000 for NASDAQ. We told you that prices are going to continue. They're going to continue this rising, this upward movement, but till these levels. Only after the retest of these levels, they're going to start to fall. So that's exactly what happened. They started to fall. And despite this gap openings, this distance between candles, in some of the index charts like S&P and NASDAQ, despite this gap openings, prices are continuing to fall because there is a really high fundamental geopolitical fear about the world situation next week or month. Really, most of countries are scared about the start of third world wars, for example, or any kind of usage of chemical or biological weapons. We are not talking about the atomic or nuclear weapons by Russia on the territory of Ukraine, which has actually happened already. We know the BBC is telling, and about this actually Reuters, CNBC are telling as well, the Wall Street journals, as they're all investigating this situation, and I think that they're going to approve it. And if they approve it, it means the sanctions are going to get worse. It means that fear on the market is going to get worse. It means that prices are going to rise further and stock market is going to fall. So because of this factor, we cannot say that in the near future S&P 500 till during this week Dow Jones and NASDAQ are not kind of going to renew the upward movement. Mainly they're going to continue this movement, this downward movement. They're going to break through the local minimums and they're going to actually go further. They're going to fall further because situation now is really under pressure. Situation for nowadays, for today, after the start of a second wave of the war, second phase of the war, and second level, which means that new wave of attacks from the eastern side of Ukraine, and all of these facts mean that this week, next week, are going to be really, really harsh, or going to be really full of explosions and full of fear. So I cannot tell that the stock market in the States is going to rebound, is going to reverse in this week or next week. It's going to actually retest local minimums. I feel even that Dow Jones could even go through 32 or 32,500. S&P 500 could actually fall to 4,300, 4,250, and NASDAQ as well could actually fall through 13,200 or 13,500. So don't forget, that's all the scenarios are really already is really realistic. And let's see what's going on with the Forex market, what's going on with dollar prices. Dollar prices have a opposite correlation with stock market prices, which is related to inflation. And what's going on with dollar? Actually, stock market is kind of falling. We already saw it. But dollar prices are not rising. Like, as we see, for example, stock market indexes are falling really furiously. They're kind of falling really wildly, but dollar prices are not. What is the reason? What could be the reason? The main reason could be actually the factor of the scare factor, which is on the market. So dollar prices or the dollar domination in the world is under some danger, because some oil countries are going to, for example, ditch dollar. For example, Saudi Arabia and Russia, telling that they're going to ditch dollar from all of their oil transactions, which could make dollar to just get isolated from all of these things. So it would mean that dollar is going to actually have their own trend, which is not going to be related to oil market, but it don't have to be actually downward. It don't have to really be downward. So dollar prices mostly have to rise further, but it's under some really strange pressure. Here we have the divergence here, a really short-term or mid-term divergence, which is forming here. And we cannot actually say that prices are not rising further, because accumulation of the energy here is really high, because the volatility shrinks really powerfully. So this volatility shrinking, it means that prices could actually make some impulsive movement before they get into main trend. Which could be, what kind of trend here could be main? I think downward. But due to the stock market movements, I cannot say that prices of dollars are not going to rise further. So here we have a situation, we have a divergence, we have a reversal signals. And the main thing that I can say that technically we have a signals of reversal, of dollar prices reversal. But let's see what would go on the stock market. If stock market doesn't fall, this would mean that dollar prices are going to fall. But if stock market indexes are going to rise again, that would mean that dollar prices cannot really rise that far. So here mainly we have some predictions of some upward impulses, which would actually continue. But be really careful, because here we have a really good chance of upward impulses, even due to the situation. If we look through the daily chart, which shows us that opening of today's candle were higher than previous day's candle, that's a really good signal, which means that nearest sessions, we are going to have some upward impulsive movement for dollar, which would mean that indexes of United States stock market are going to fall. Euro, pound, Australian dollar, and New Zealand dollar as well are going to speculatively fall. But when would it happen, we don't know. But the signal here for long term, for mid-term, is actually more upward down than downward. We have some, I repeat it again, we have some divergence signal, but that's not really, could not always divergence work. So here we have a fundamental information, fundamental analysis of the situation, the geopolitical situation, which is not going to help markets in the nearest days, in the nearest hours. And because of that, mainly we cannot believe this divergence. I don't actually believe it. I think that even if prices make some downward movements, it's going to be speculative downward movements. So here I'm mostly pro dollars rising. I think that dollar is going to rise. Despite all these technical signals, I think that dollar is going to rise further. And stock market is going to actually retest the local minimums in the near future, in the nearest sessions. American session and Asian sessions next day. So let's go further. European currency, of course, it could retest the local minimums. We have some signs of convergence. It's a really short-term convergence here, but mainly the downward trend here is going to continue. So just wait for it. For GBP as well, the situation here is really dangerous. Prices are going to are showing us that they're going to reverse, but mostly here some speculative movement could happen. So I'm telling you about the downward speculative impulse, which means that it's going to form in a pattern of one candle, one bearish red candle downward, which could retest the local minimums or go and retest the next target levels as well. So here mostly we're actually waiting for some downward impulses. Let's see what's going on with the Australian dollar to United States dollar and New Zealand dollar. Both of them are kind of retesting some trend line here and kind of a mirror level. But even here we have actually a convergence as well. If you see it, we have a convergence between minimums and the oscillator lines, RSI oscillator lines. Australian dollar as well, we actually doesn't have convergence here, but this would be some kind of corrective upward movement, but the amplitude is going to be really low. So the main speculation which we are looking here for is the downward bearish speculation of the market. So here as well we can say that next movement, the next sharp movement is going to be downward as well. Even despite some technical signals that we have. Crude oil prices. Let's see what's the situation with crude oil prices. Crude oil prices is showing us exactly the movement like Australian dollar. It's when prices are shrinking, like volatility shrinking while prices are falling. So this is actually a reversal signal, but till it works, till trends start to reverse, we're going to have some speculation. In this example, we're going to have some bearish speculation. So just wait for it. Maybe we're going to have some bearish speculation which could continue to $80 to $85. And there's no actually reason for oil to do something like that. But before prices reverse, just choose some zone, choose some range to close your losses, to just put the stop loss order there, like 90, like 85. So I think that 90, 85 are good levels, actually showing us that prices, maybe they're going to retest these levels, but mostly in the case of speculative, impulsive retest of these levels, it would mean that oil prices are mainly going to reverse and continue to rise. Here, the main thing that I think is that despite all of these signals of convergence and the prices volatility shrinking, I don't think that prices are going to make that large or sharp downward impulse. But we just need to be ready for it. But I don't think that prices are going to make this sharp downward. They're actually already rising, and they could rise further in the near future. And let's see what's going on with gas prices. Gas prices rising is rising really good because the situation in the Eastern Europe is really harsh. Sanctions are continuing, but gas sanctions or oil sanctions haven't really, they're not that powerful. So because Europe needs Russian gas and Russian oil, and it cannot just reject it in the short term, so they're going to actually continue to buy. So maybe gas prices are going to be under a little bit of pressure, but mainly it's going to rise because next sanctions are going to come in each week, as Boris Johnson said, as many European leaders have already said. Each week new sanctions are going to get ready and going to be approved. So because of this factor, I cannot say that prices of gas or oil could really fall that far, but in the near future they could continue their really moderate upward movement. It would be really moderate, and they could continue it, but it would be really moderate, but it would be upward, even despite all of this volatility shrinking, despite all of this divergence which we have here between maximums and the line of oscillator. This is divergence, that's a reversal signal. Even despite all of these factors, I think that prices maybe would make some correctional downward movement to 650 to 6, but next they're going to rise further. So I don't think that even prices are going to retest $6. They're going to actually just retest $6.50 and then return and go further. So here with gas prices, I don't really believe in the reversal. I don't really believe that prices can make some downward movement. Mainly they're going to continue this movement further. And let's see what's going on with United States dollar to Canadian dollar, which is oil, which is a petroleum currency, and Mexican peso, which is as well a petroleum currency. Both of them are falling because actually peso, United States dollar to peso is falling, and United States dollar to Canadian dollars waiting for retest of a mirror level. Next thing that we are going to have definitely is reversal. So for United States dollar to Canadian dollar, here because of this accumulation of energy, here because of some divergence that we have mostly have it already, we just need to wait for a reversal. And I think that in the near future, in near sessions, you just need for United States dollar to Canadian dollar to wait for the retest of 1.27 for the retest of 1.2680, And after the retest of 1.27, 1.2680, you can actually understand the prices are not going further. They're not going to rise further. So they're going to reverse from these levels. And this reversal could actually continue to 1.25, to 1.2550 to 1.25. So for now, bears of this pair are going to get into market soon. So we actually don't need to lose this chance as well. We have really good signals of a reversal which could happen in the near future, but don't forget that before any kind of reversal, first we have to wait for some impulsive, speculative, opposite way movement, which in this case is going to be upward impulse, after which price are going to reverse for a midterm, for some days maybe. So next comes United States dollar to Mexican peso. Here potential downward movement have been closed already. We can get into some consolidational movement, but impulsiveness of this movement as well is telling us that on the time that we get near to this minimum of 1980 or 1960, prices are going to stop this downward movement. So 1980s mainly is going to get retested, maybe 70 is going to get retested, but not further. I think the price are going to get into a consolidation in the near future after the retest of these levels. So next comes the commodity prices: gold, silver, palladium, and platinum. As you know, steel prices, coal prices, palladium prices, all of them are under the sanctions because most of the producers in different countries, they actually buy all of these materials in Russia. For example, about steel, yes, of course, Australia is one of the biggest exporters of, for example, steel or the other things, even different type of minerals or different type of iron. But the main thing, the metals. But the main thing is that mostly European countries and the production in the United States even is really related to Russian exports. And all these exports are going to get under sanctions. They're all going to be under the pressure of this new sanctions. So steel have been got under sanctions, coal have been got under sanctions, and palladium as well is under sanctions. And palladium, coal and steel are going to rise. They don't have that potential to fall. They don't have that potential to fall. So I cannot say about palladium that it's going to fall further, but gold or silver or platinum, they could really fall because if stock market is going to be strong. But during this week, during next week, we have to see. Stock market is kind of showing us that it's starting to fall, as we actually predicted from previous times. We said that S&P 500 is going to reverse after the retest of 4,500. Dow Jones is going to reverse after the retest of 35,000. And Nasdaq is going to reverse after the retest of 15,000. And that happened already. And we said that after this reversal, prices are going to continue this downward movement. So now they're continuing this downward movement. And they could continue because of the geopolitical and fundamental impacts of the war and sanctions and chemical hazard nowadays in Ukraine. That's a really worst factors for stock markets. And during all of this chaos, European market could start to rise, for example. That's the other thing. So as well, gold and silver could start to rise, and they've already started to rise. 24.50, 24 have been retested, as we said from previous time, for silver, and for gold as well. 19 and 1,900 have been retested, and prices start to moderately rise. Here and now we have some consolidation movement. It could continue in the near future. This kind of retest, this kind of explosion of volatility here means that prices are not going to go higher. It means that prices here are going to just retest the local resistance, and then they're going to return back. But for gold and for silver, we could have some chaotic chances because of the situation in Ukraine, and because of the escalation of this war situation, escalation of world war even situation. we have some chances for gold and silver despite all these technical factors of consolidational movement or etc. We have a really good chance for them to rise further. So just maybe wait for it. I think that they're going to start to rise really. They could actually make a rally in near future because of the fundamental thing. And here pressure to local maximum as well is really high. So I can say that there could be some downward speculations to just let you believe that prices are not going to rise, but in near future, in near days, in near sessions, price of gold and silver are going to start to rise. That's really against the technical issues, the technical analysis, but it's pro fundamental analysis, which is kind of getting worse and worse day by day. Silver futures. We've already said that speculation could continue to 22.15, not further. I think the price is going to continue this upward movement in the future. And about palladium as well, we said that prices are going to retest the local minimums of 22 and then reverse. Impulsiveness of downward movements already showing us that prices are not going to continue this movement in the future. The impulsiveness of movements shows us that prices are going to change this trend. So prices are just going to retest 22 and even maybe 23 and then just reverse and start to rise again. That's a speculative movement already happening. What's going on with platinum as well? Speculative retest of local minimums. I don't believe it. I don't believe that prices are going to go further. It could be a really, really, really scary speculation. It could be a really professional speculation of the bulls that prices are going to downward, but oh no, within some sessions we're going to get into market again. So this would be a really bad speculation. That would be a really false breakthrough of 940. We're going to have it, I think, but this is a false breakthrough. This is going to be a false breakthrough. Impulsiveness is already showing us prices are not going to fall further. Just pay attention on this factor. And United States to Swiss franc and Japanese yen. Swiss franc and Japanese yen already, like commodity, they rise when something is wrong with market. So for Swiss franc and for Japanese yen, unfortunately, Japanese yen is really under pressure of monetary policy of the country. So we cannot say that Japanese yen is going to strengthen further. So it would mean that United States dollar to Japanese yen is going to continue to rise. And about Swiss franc, maybe they could kind of make some pressure for prices to not rise that far, but due to technical factors which we have here, impulsive retest of mirror level of 0.93 or 0.9250, it would mean that prices are going to reverse. It means that prices are going to continue this moderate upward movement. I think that it's more possible the continuation of moderate upward movement for United States dollar to Swiss franc. So get ready for it and start to use this situation for your profit. United States dollar to Japanese yen 4-hour chart, a really long-term divergence. It would be really bad for long-term trend, but for short-term we are going to have the continuation of upward movement. 125 have been retested. Amplitude is really showing us that prices have actually retested the local maximum like a mirror level. Just pay attention on this. Just pay attention how they retest this local maximum like a mirror level. And this is a really good signal of the continuation of upward movement despite all of this long-term divergence signals, for example. So 130 maybe it would be the next level for United States dollar to Japanese yen. So be ready, bulls. We're going to fly high. And we're going to check the Bitcoin prices, Ethereum prices as well. If you remember from previous times as well, we said that Bitcoin and Ethereum prices are kind of, till now, they're kind of related to stock market. They're kind of have a straight correlation with stock market indexes. And we said that Bitcoin is going to retest for 7,000, Ethereum is going to retest 3,600 or 400, and then they're going to reverse. So that's a picture that actually we've got from previous times predictions. Previous time predictions was about prices potential of the retest of local maximums and next reversal. So it actually happened. Prices retested the 47,000, reversed, and the downward movement continued as well. So here we can say that predictions have come true. Ethereum prices as well. 3,600, 3,400 retested, and then prices started to fall. So as we see, predictions have come true. But for now, for today, I can say that maybe prices are going to get into some consolidation for next session, and then they're going to continue this downward movement. So in near future, we're going to have some consolidation for Bitcoin and for Ethereum. In the case of any kind of formation of impulsive upward candles in the near future, this would be great signal of reversal and the continuation of downward movement. But I don't think that something like that would happen because we don't have any kind of news from news background of Bitcoin and Ethereum. News background of cryptocurrency in this year is going to be really not good. And this year is going to be really pro stable coins, mostly than altcoins or main cryptocurrency. So in this year, maybe you have to actually pay more attention on stable coins, not on holding of Bitcoin or Ethereum, because they could really continue this downward movement. They could really continue this fall, even despite the impulsive retest and impulsive movements which we have now. So maybe in the nearest sessions, in the nearest hours or days, we're going to have some consolidational formations, which means that prices are going to show us that, oh, they're kind of starting to strengthen again, but that won't be really true. So be ready to just get into this movement for trading short positions again, maybe after the retest of 44,000 for Bitcoin, or maybe after the retest of 32,000 for Ethereum. So be ready, bears. We're going to fall further. Thank you guys for watching this video. Don't forget to subscribe on our channel and ring the bell so you would know what kind of products and what kind of programs we're going to have, so you won't miss them. Don't forget to check our website, our main website of Gerchik.com, and there you can actually find different type of instruments for trading and different type of courses for learning as a professional and as a beginner as well. It will be really, really useful for you. Check the videos, don't forget to like it, and don't forget to subscribe and ring the bell, as I said earlier. Till next time, have a good tradings. Take care. Bye bye.